I've just spent all this money on my property renovating it. Can I claim it against my rental income? Let's have a look at the revenue versus capital debate. Hi, I'm Kimberly Shapcott. Let's sit down and have a chat. Many investors assume that you can just claim everything that you've spent on a property against the rental income that you receive. Unfortunately, this is not the case. And we have two terms in tax, one that is revenue and one that is capital. Now, what is the difference between these two? So let's start with this as the basics. Revenue is where you've spent money on repairs or something that you can claim against your rental income. Capital is something that you've spent for the long term. So you've built an extension, you've built a building. So that's a capital expense. It's not something you're going to claim against your rental income. It's something you will claim in the future when you come to sell the property, and it will come up in the capital gains tax calculation. So let's look at a couple of examples of what might fall into the different categories to give you an idea of what you can be claiming and what you can't be claiming on your rental income, and what will fall within the capital gains tax calculation. So let's think about a property that we've just purchased. We're doing some work on it and we've replaced the roof, we've got a new boiler, we've repainted the whole house, we've done a whole host of work that needs to be done. Now, which of these are capital and which are revenue? Now, as a refurbishment project, quite a lot of this is going to be down to capital, because this is all to bring the property back up to spec of being rentable. Now, that's probably not what a lot of people want to hear, but unfortunately that is the case for a lot of big refurbishment projects. If you're repairing an existing item, so maybe you've got a boiler but you need a few parts in to make it run, or you need to replace a radiator but the rest of the system is fine, this would probably fall within the revenue category, because you're just repairing or replacing an existing item and you're not really upgrading or doing anything different to it. One thing HMRC has is some tests that we can look at to see how it would categorize something. So let's start with the roof test. Now, let's say we've got a flat roof on our property, it needs replacing, it's got holes in. Now, if we just replace it like for like, then this would be a revenue expense. This would be something we can claim against any income that we've got on that property. If we decide to have a sparkly new roof that's a pitch roof that makes it maybe look better, or it might be just work better so we've not got the flat roof issues that can arise, well, now we've moved into the territory of capital expenses. This territory is because it is new, it is upgraded, it's not like for like. So that's just one example. Let's look at another example, like the kitchen test. So the kitchen test revolves around, we have a kitchen in a property, we tear it out because it's old, it needs replacing. Now, if we replace it again, like for like, same number of cabinets, same setup or similar setup, then this could be claimed as a like-for-like revenue item. However, if we replace it with an all singing, all dancing, or we look at putting a few extra cabinets into it, then this would tend to move us towards the capital approach, that we're actually upgrading it, we're improving it, we're adding value to it, and that would fall within the capital expenditure approach, which means we can't claim it against our rental income. Now, we can look at this on a number of other areas for things like boilers. Am I replacing an old boiler with a new boiler that's all singing or dancing, or I'm just replacing it with an existing standard that is the general standard of everywhere? So it's kind of a like for like, but it is an improvement on what was there before. Now, in that case, we'd probably go, it's a repair, because you're replacing like for like. It's just the standard of 20 years ago is obviously slightly different to the standard of today. And another great example here is things like double glazing, where you might be putting double glazing into a property which doesn't have double glazing at the moment. Now, we'd probably look at arguing that that's a repair rather than a capital expense, because you're just bringing it up to the standard of what everyone has in their homes at this point in time. Now, if you're doing this as part of a refurbishment, you may have a builder who's doing a bit of both. elements. They may be doing revenue work, they might be doing capital work. So what you just need to make sure you do to make it easy and obvious so that it's easy to claim your tax relief, where possible, is to ask them to split the bill so that they do show the separate elements of their work on the bill. And then we can see exactly what is going to be a revenue item, which is going to be a capital item. So if the taxman does want to ask for evidence and see some information on what has and hasn't been claimed, you can show we've claimed this here, we've not claimed that, that's going on the capital calculation when we get there in the future. So it makes it very clear so you have no issues with the taxman trying to disregard an expense that you have claimed. So the key thing that we need to remember is the revenue expenses, if we can claim them that way, which we'd probably all tend to suggest is slightly more preferable as we see the tax relief now, that's great. However, if it is a capital expense, unfortunately, we will have to wait to get that tax relief. We'll get it eventually when we come to sell the property, but we just need to make sure we retain the records for the number of years that we have that property. So when we do come to sell it in maybe 5, 10, 20 years, we have that paperwork ready to hand for those capital gains tax calculations. Now you might think, oh, well, I'll just put it through and see if the tax office asks any questions. Unfortunately, the tax office does ask questions, and if it asks questions about an expense, it can't disregard that expense. So you've not paid your tax bill correctly. Now, this obviously has the consequences of penalties. It has the consequences that you're going to be paying interest and additional charges that you wouldn't have paid if you'd have just calculated the taxes right in the first place. So I know there is an element where people think, I'll just put it through and see what happens. Unfortunately, that opens up the possibility of HMRC coming to get you, which with what we're trying to do, we're trying to make sure we do things right. We do things in the right way, the right manner, and we follow the tax rules to arguably get the advantage of them, as well as, unfortunately, for some of these, we have to pay the price when we do the work at this point in time. As with many tax rules, there is no definitive rule for all of this. It is a wavy line where in some cases it will be revenue, in some cases it will be capital. So it's just really looking at the situation and making a judgment call. And as appropriate, documenting that judgment so that if there is any questions, you can answer those questions. Obviously, the taxman might have a different judgment, but then that's at the point where you would speak to them to get the, hopefully, result that we are looking to achieve. Revenue and capital can be a complex area depending on the project. So I definitely suggest speaking to an advisor to try and make sure that you're allocating things to the right place so that your taxes are as correct as they possibly can. Hopefully today you've discovered a little more about what revenue expenditure is and what capital expenditure is, and some of the tests involved to find out which is which. If you have any questions on whether something might be revenue or it might be capital, then please do leave a comment and we'll see about answering some questions to show what is and what isn't capital and revenue expenses. Please subscribe to the channel and do like this video and share with anyone else who needs to find out a little more about what revenue is and what capital is. Let's make tax less taxing.